It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at Likefolio. Welcome back to the show, Andy.
Hey, happy Monday.
Happy Monday to you too, and happy Monday for all the Affirm investors over the past 12 months because the stock's up 345%. I mean, are you guys seeing the data that supports it? I know this stock gets kind of lumped in, something that's not making money yet. There's short interest built up in it. Maybe that's part of the reason that you're seeing the rally, but the consumer's remaining resilient. Are you seeing data on Affirm that's, kind of supports this thesis in this move?
Yeah, the consumer remains resilient, and I think also the consumer is changing the way that they shop online, at least a segment of the population. Affirm essentially loans money to customers who are buying online so that they can pay for their purchases over time, buy now, pay later. I think the big deal for Affirm and the reason that Wall Street's starting to like it, a reason that we are, somewhat reluctantly starting to really like it, is the exclusive deal that they have with Shopify, and we see Shopify as a major trendsetter. It is a tide that rises all boats. Shopify is doing a fantastic job of kind of taking over the internet from a direct-to-consumer perspective. They're taking everything that Amazon pretty much is not, and so Shopify, as an Affirm as an exclusive partner for Shopify, is benefiting in a very big way from that, because that they are the provider of buy now, pay later services for Shopify. And so, from an overall perspective, Likefolio perspective, it's kind of a what's not to like about this. Web visits to Affirm are up on a year-over-year basis. The Shopify tailwind is enormous, and we think that continues to bolster what Affirm offers. And then the other thing that we're seeing is just, when we kind of dig down into some of these social media mentions about Affirm, we're starting to see some indication that customers actually prefer this method of payment to paying with a credit card. It's not always my credit card is maxed out, so I have to use buy now, pay later. A lot of people simply prefer this because the payments are scheduled and structured in a way that they understand and can plan for. And so I think there is a little bit of that consumer adoption angle that I think skeptics tend to gloss over or miss completely. So overall, we think Affirm is in a very risky category, but in one that is paying off for as long as the consumer and the online providers like Shopify can stay strong.
Andy, can you elaborate a little bit on that kind of risky element? I think what you're alluding to is the experience between one to another is relatively similar, as well as if that were to break down, let's say that exclusive partnership with Shopify, there's really no major difference to the consumer. They just like buy now, pay later. Barriers to entry might be a little bit, let's call it, easy to overcome for many of these companies. Is that kind of what you're getting at?
Yeah, absolutely. That is a huge factor. It's really difficult to see that there's any significant consumer loyalty to Affirm itself. It's, really reliant on the partnerships that it's establishing, but it is a market leader. And a lot of times that can get you the market share you need and become very defensible. The other thing about it is, Affirm is loaning money to people that otherwise, a lot of times can't get loans. And that's, in and of itself, a risky proposition. I'm not sure how their debt offloading structure works, but, a lot of times they are the lender of last resort. And so that just by its nature is a risky business to be in. But so far, so good. We think Wall Street overreacted to the upside, 2020 and 2021 probably overreacted to the downside, and now we're kind of figuring out where Affirm should be.
Andy, I kind of wanted to, dive into this a little bit from the perspective that, hey, unemployment rates at 3.7%, wages have been growing. So it seems like it works out pretty well, right? The write-off last quarter, delinquency rates were just above 2%, which kind of counters that notion that it's like a house of cards built on, micro loans and this stuff. But is this maybe one of those companies that might be susceptible that, hey, if the economy turns or there's more layoffs, credit card debt's already at record levels for people. Is that the caveat that might, crack the back on this massive rally that we've seen?
Yeah, absolutely. I think, it's one of those plays where if you're bullish on Shopify and you're bullish on the overall online direct-to-consumer customer, then Affirm is a fantastic place to be because they've proven the model when things are good. What they haven't proven is the model when things turn bad. And all of those things that you're talking about, are real risks. And I think, that is a competitor stepping in, Shopify or someone like that building their own version of this, a bank stepping in to partner with Shopify or these others. And then also, of course, if the consumer weakens or if the consumer, has taken on too much debt and this is the last loan they're going to pay back, in a lot of circumstances, then Affirm becomes really wobbly. And so I think you have to weigh both of those together. The short sellers are building on one side and the buyers are building on the other. So it's a classic, we'll find out probably in 2024. But for now, Affirm riding some really nice waves.
Yeah, it'll be interesting to test that kind of credit risk element of this if we get a chance over the next couple of years, or if we're lucky, maybe there is no type of hard landings or anything, and there won't be any tests, and that'll be a conversation for another day. But I do want to pick your brain kind of long term. What companies like Affirm, what companies like Shopify, maybe you throw a Block, formerly known as Square, or PayPal in there as well. What are these companies and others I'm sure I forgot, what is this doing to the traditional kind of credit card networking element that we've had in place for decades? Is there a risk there down the line, decades down the line maybe, to the Visas, the MasterCards of the world that have kind of had a stranglehold on this kind of commerce outside of the cash element for what seems like as long as I can remember?
Yeah, absolutely. I think there is, most of our data on this is, fairly loose. It's kind of subjectively analyzed in terms of our research team's human eyes on it, but there definitely is a little bit of a building preference for this type of loan or purchasing process over the typical credit card process. It is, I know what my payments are going to be, I make those payments and I'm good. Whereas sometimes the credit card can just build up on you to a point you didn't realize what the payment was going to be. It grows and you find yourself in some trouble if you're not paying a whole lot of attention. And so I actually think one of the more bullish theses for Affirm is that it could be an acquisition target for one of those traditional credit card companies who want to get into the space and protect the moat that they do have. And so I think that's kind of that outside flyer opportunity, on the bullish side of Affirm, is that they're disrupting enough to actually be something that one of these larger companies has to own.
Yeah, just like Afterpay was, scooped up also. Maybe they paid a little bit too much for that. But yeah, definitely, that M&A activity could possibly come into play here. And you got MasterCard and Visa that just hit all-time highs last week too. Yep. So consumer is doing well. All right, thanks Andy, appreciate it.
All right, thank you guys.
That's Andy Swan, co-founder at Likefolio, breaking down the data for us.